Hello and welcome to the Beyond Daily Finance Show. I'm your host, bringing you the logic behind the numbers.
And I'm your guest. I'm just here because I owe money to my credit card company, and I'm hoping to learn how to make it disappear.
That is not exactly what we do here, but we will talk about debt today. It is Friday, November 28th, 2025. We have a packed show. Global markets froze, AI is borrowing the moon, and Black Friday is changing.
Wait, did you say markets froze? Like, actually froze? Did someone leave the AC on too high?
Ironically, it was the exact opposite. Let's start with our top story. The Chicago Mercantile Exchange, or CME, had to halt futures trading due to a cooling issue at their data center.
So, the computers got too hot? That's it? The global economy paused because a fan broke?
Basically, yes. This is serious, though. The CME is where the world manages risk. We're talking about futures for stocks, currencies, bonds, and commodities. When that goes down, traders are flying blind.
Imagine being a trader with millions on the line, slamming your keyboard, and the IT guy is just like, "Have you tried turning the data center off and on again?"
It caused massive disruption. Operations were eventually partially restored, specifically the Forex platform, but for hours, liquidity just evaporated. It highlights how fragile our digital financial infrastructure really is.
It highlights that we need better fans, or maybe liquid cooling, or maybe just put the servers in a fridge. I could have solved this for $50.
I doubt that. But speaking of massive sums of money, let's pivot to tech. OpenAI partners are amassing a debt pile of nearly $100 billion to fund their ambitions.
100 billion? With a B? Who lends you $100 billion? I can't even get a mortgage for a shed.
It's a complex structure. Cloud companies and developers are taking on loans to build the infrastructure OpenAI needs. Essentially, the ecosystem is leveraging itself to the hilt to bet on the future of AI.
So let me get this straight. It's like if I borrowed money from 5 different friends to buy a Ferrari, hoping that one day the Ferrari learns how to drive itself and becomes an Uber driver to pay them back.
That is a surprisingly accurate analogy. The risk is that if the revenue doesn't materialize fast enough, or if the Ferrari crashes, that debt becomes toxic. It's a high-stakes game of financial Jenga.
I get anxious owing my buddy $20 for pizza. I cannot imagine waking up knowing I owe 100 billion. Do they sleep? Or do they just use AI to sleep for them?
They probably don't sleep much. Now, since today is Black Friday, we have to look at the retail sector. The data is in. For the 6th straight year, online sales are outpacing in-store shopping.
Finally, I don't have to fight a grandma for a flat-screen TV anymore. I can just click a button in my pajamas and fight a bot for a flat-screen TV.
Exactly. The term Black Friday used to conjure images of stampedes. Now it's about server load. But it's also being called a retail letdown for brick-and-mortar stores. They're struggling to sustain the foot traffic.
Well, yeah. Have you been outside? It's cold, people are weird, and parking is a nightmare. The economy is basically transitioning to introvert mode.
There's truth to that, but for the economy, it means logistics and digital infrastructure are now more critical than storefronts. If you're investing in retail REITs, real estate investment trusts, you might want to double-check their occupancy rates.
My occupancy rate is 100% on my couch right now. Does that count as a REIT?
No, moving on. Let's talk about utility stocks. They were soaring earlier this year because everyone thought AI data centers would need infinite electricity. But now they're falling.
Wait, I thought AI ate electricity, like I eat Thanksgiving leftovers. What changed? Did the robots go on a diet?
It's about timing. Investors drove the prices to all-time highs on the hype, but building power plants takes years. The revenue isn't instant. Investors realized they were pricing in 2030 profits in 2025, so they're selling off.
So it's the classic buy the rumor, sell the fact that building a nuclear reactor takes longer than a weekend trade.
Precisely. The AI power surge is real, but the stock market got ahead of reality. It's a good reminder that a great macro trend doesn't always equal immediate stock returns.
Man, finance is exhausting. You have to be smart about cooling fans, AI debt, shopping in your underwear, and electricity timelines. Can I just go back to bed?
Not yet. We need to wrap up. To recap, CME had a meltdown, OpenAI is leveraging the future, Black Friday is digital, and utility stocks are cooling off.
And remember, folks, if you owe someone money, just tell them you're structuring it like an OpenAI partner. They won't understand, but they might be impressed.
Do not do that. This has been the Beyond Daily Finance Show. Thanks for listening and happy trading.
Bye. I'm going to buy a toaster online now.